So, positive day on the JSE, and joining us is Greg Katzenellenbogen, Director at Sanlam Private Investments, to give us his view on the markets. 18 billion rand passing through and futures close out tomorrow. Is that the reason?
Well, I think a lot of people squaring their positions before the actual futures close out tomorrow. But of course, the markets have been pretty strong. You know, the US market closed last night over 200 points up, so our market had to play some catch up today. But it looks like the economic news globally
Are you convinced though, Greg?
No, I'm not. I think that if somebody was to say, you know, today, the 14th of March, everything is okay and we're going forward in Europe, problems are solved, definitely not. I think that I don't think we've heard the last of the Greek problem, and, you know, we could still have some...
Markets are shrugging it off. I mean, during this very volatile time, gold pretty much did nothing.
Yeah, the markets are shrugging it off. Well, gold is under pressure, of course, because it doesn't look like the US are going to come with any further quantitative easing. So, of course, that is why the US dollar is strengthening, because people are, for today at least, regaining some faith in the paper currencies. But I think that is temporary and that won't last.
So you don't have faith in paper currencies then, I would assume?
Well, I think we're still a long way from, you know, the global situation returning to normal, and you're starting to see, but the US economy can't really be said to be in recovery mode until such time as the housing market starts to recover.
So a lot of the companies literally in positive territory, but a lot of them also coming under pressure. Anglo Gold down 2.8%, Harmony also coming under pressure, MTN shedding 1.3%, and then we also saw some of the retailers, Shoprite and Massmart, also ending the day off, Greg, in negative territory. Those retail sales numbers disappointing a lot of economists out there. You're also disappointed. 3.9% growth year on year in January. Yes,
I think, look, they've been doing pretty well, so there's some sort of slowdown was expected, but I don't think that it's a train smash those numbers. I think, look, Shoprite, if you look at the PE ratio of the company, it's pretty elevated, and people have made excellent profits in that particular share. So I think it's, you know, some profit taking is not out of the ordinary for that, but Massmart as well has also run very hard. So I think, you know, in the retail, people are looking at now other opportunities in other sectors.
Greg, there seems to be a bit of a concern with regards to grants not, coming in as people expected into this year. There's also concern that the wage bill is not going to grow as dramatically because the money is going to be spent with regards to investment. Is this going to create a far weaker consumer environment in South Africa?
Well, I don't know. It's possible that it will be. I don't think we've really been able to gauge the full effect of that as yet. But I think the South African consumer is not doing too badly, and I think, but it will probably lead to the Reserve Bank holding off longer, before looking to raise interest rates. But I would say that the consumer is in reasonable shape.
One of the big issues when it comes to retailers is there is a concern that they haven't been passing down all the cost pressures that a lot of the retailers have been experiencing across the board, saying that if these cost pressures are passed down, then we'll see a far weaker retail environment. Do you think that this is a risk?
It is a possible risk, but I think, you know, the numbers, if you're seeing the companies have been producing above average growth, so they've been able to, you know...
people keep saying that they can't sustain it, but they keep sustaining these levels.
Yes, well, look, I've heard the retailers are going to run out of steam for a good few months now, and that hasn't happened.
All right, let's touch on Naspers because it was the top of the top 40, up almost 3%. Very good news out coming through from Tencent. We saw 15% growth in earnings, and it seems that Tencent is going to be focusing on capitalizing on online advertisements.
Very much. Well, if you look at Naspers, if you really take the net asset value of that company, I mean, it's closer to around 700 Rand a share. So essentially what you're paying for is 10 cents and you're getting the rest of Naspers almost for nothing. So we're very bullish on Naspers as a share, and we think that it's very undervalued.
Let's also touch on Implats, and we know more troubles coming through with regards to Zimbabwe. At least we know what the shareholding is going to look like. A big chunk of that going to the Zimbabwe government, but just news out on Reuters a short while ago saying, Implats telling Zimbabwe, no cash, no shares. So they are waiting for the cash first before the shares are handed over.
Well, in a way, you know, they're going to provide the loans for the shares, interest-free loans to the various groups. Impala will provide those loans, and then it will be repaid out of dividends going forward. But I think, you saw the Impala share price seems to have stabilized somewhat.
So up 1.4%
yeah,
today.
so investors are happy, we're getting to some finality on
Do
the
you
Zimbabwe.
like the platinum stocks as a whole?
I like platinum generally. I think that Impala would be my top pick because it's a very liquid stock. I think a lot of the uncertainty of Zimbabwe will be, that's behind us now, or close to behind us. So I like platinum very much, also tied to the recovery in global growth.
Are you worried about China, though, being a very big unknown with regards to demand for platinum and, of course, even looking at the copper market?
Not too concerned about China. China's been written off for a while now, and of course recently when the next 5-year plan looking to bring their GDP into around 7.5%. But China's always exceeded that, so I'm not very concerned about the Chinese economy falling off a cliff. I think that they do have a problem in the property sector, but I think the government is managing that extremely well.
Right, the Aveng Group, South Africa's largest infrastructure development company, posted a 34% decline in headline earnings for the 6 months ended December 2011. Earlier today we spoke to the group CEO, Roger Jardine. Let's take a look.
The softness in South African infrastructure. Our order book in fact climbed 24% to 46 billion rand, but 31 billion of that coming from Australasia. So definitely all still quiet in South Africa.
Absolutely. I mean, if we drill down into things, I mean, even where you talk of this 2-year order book growth up 49.2%, locally, that's contracted 24%. So that giving you a sense of even the outlook ahead and just how subdued a market we're looking at right here within South Africa's borders.
Very, very subdued. I mean, the diversification of the Aveng Group has come through for us once again. You're seeing this in terms of almost having that hedge outside of the country. We're a global company. We're in about 30 countries. But of course, we'd love to apply our balance sheet domestically. We have applied it in PPPs in Australia, for example. So we're positioned for when the infrastructure rollout happens. We've seen a lot of policy pronouncements. I think there's increasing political will. We now need to move to the stage of implementation.
And Aveng out a little later saying that they are planning to spend around $400 million with regards to joint ventures and acquisitions. So it seems that they are allocating capital, but I don't think within the South African space.
Not really. You saw because of their diversification, the offshore businesses have helped them, and that will probably be continue into in the foreseeable future. But one can ignore some these results that have come. That's all history now. The outlook for construction.
Is this the final bottom?
Well, that's
because there's been a few
difficult.
bottoms over the past 12 months that I've been hearing from a lot of the investors out there.
Well, yes, I don't know if it's a final bottom, but I think the outlook for construction is looking a lot better than it did 6 months ago.
Are you light on equities? What is your position right now?
No, we are bullish on equities generally across the board. We think that the markets are going to, that global growth will recover. We are a bit concerned that the market has run pretty hard since January, that it's due for some sort of a pullback, but we think that will be a small pullback before moving on higher later in the year.
Fantastic. And Greg, if we could just now focus on the overall JSE All Share versus the top 40, because we know the top 40 has been driven predominantly by the resource stocks. JSE All Share has been hitting new record levels because it's predominantly been driven by the industrial stocks. Are we going to see this rotation into the other underperforming resource stocks?
I'm not quite sure if you'll see that. I think that there are opportunities in the resource sector, but as people are concerned about the outlook. If you take a share like Kumba, they've been producing record results, but it's on a 8, 9, 10% dividend yield. The market is extremely concerned that those earnings are not sustainable because they believe that the iron ore price is not sustainable. So that is a worry. But of course, the company continues to produce the results. So, but if you look at shares like Anglo look reasonably priced. In fact, they look cheap at these levels. Billiton, of course, they invested a lot of money in the shale gas businesses, and they might have to take some write-offs there, so keeping the share a little under pressure.
Greg, why do you think there's such a huge discrepancy from what we've seen on the commodity price front, where we've seen a nice increase on commodities, and the share prices of a lot of these resource companies, not only in South Africa, we've seen this across the board globally.
Well, to a lesser extent globally, because don't forget, BHP Billiton here has not achieved its previous highs of over 300 odd rand achieved in the 2007, 2008 prior to the collapse. But if you look at these stocks like BHP in London has done pretty well since that time. Anglos have done a lot better, also haven't exceeded their highs. But in South Africa, a lot of can be ascribed to the rand, the strong currency that has kept a lid on the commodity companies.
Sasol failed to sustain the 400 Rand level. It's sitting at around 385.
Yeah.
What is your view? Fantastic results. Earnings up 85%.
Fantastic results, fantastic company, but it's quite possible that it's going to meet some resistance at these levels because the oil price is elevated and the market is believing that there will be some troubles in the Middle East and Iran in particular, and that's why they're keeping the price on the boil. But if that does not materialize, oil price can come down quite sharply, and Sasol is very much geared to the rand price of oil, so you would need a weaker rand in order to mitigate against oil price coming down. So I think Sasol in the short term is fully priced, but you can talk to a lot of research houses out there and they'll tell you their values are around 500 Rand. But at the moment the market's not believing that.
Fantastic, Greg. Great to have you in studio. Much appreciated for your time.